What is going on, ladies and gentlemen, traders and investors? Welcome to our end of the market update for May the 12th of 2021. I am Camilo and I hope you guys had a great day today, even though it was a bloody mess out there. I hope you guys are being protective with your capital, with your account, and I hope that you guys have some cash on the side for us to, or for you guys to deploy in the event or if and when we bottom and we start heading on higher. Okay, in times like these, you have to understand and take a look at your cash balance, okay, and your trading account. In times like these, there should be some cash left and reserves so that you can again take advantage of when there are discounts, because essentially that is what's happening. A lot of the growth stocks, a lot of the stocks that were the stay at home during the pandemic have been taking a big hit, so they're relatively getting cheaper at the moment. Okay, and so what happened today was that the reason why we kept on going lower, if you watched last night's video, we were anticipating and waiting for the 8:30 CPI data that came out this morning, and it was above expectations, causing some sell-off in the markets, causing a fear in inflation, the rise of inflation. And as you know, Powell has been saying that our Chair, Jerome Powell has been saying that he will let, there is expectations of a little bit more above 2.5, 2.6% in inflation, and he is letting it run just slightly. They have it under control, quote unquote, and it's transitory. Okay, that's the word they've been using. So it's not much of a concern for them, but clearly the markets have been pricing that in now. And what do I mean by price it in? They're pricing in a potential rate hike for the next FOMC meeting. We'll have to take a look at when that is, but I think it's in June or July if I am correct. We'll take a look. Don't quote me on that. But the point is this, okay? If the market is now pricing in a possible rate hike, or the slight chance that Powell is going to start mentioning that in his next FOMC meeting, that's what we're probably seeing right now. I can't be sure, but that's my thesis coming in for this markets. Now, in last night's video, we highlighted the fact that we may have a continuation lower. So before we dive into the wave counts, let's take a look at our technical indicators here, our traditional 50-day simple moving average and the 200-day simple moving average. So as you see here, if I zoom in, we have lost the 50-day simple moving average, which is highlighted in orange. Okay, we held support over here, and now we broke through it yesterday, and now we are trending lower. My best guess here is that we are potentially going to retest the 200 simple day moving average, which hasn't been touched since April the 15th of 2020. So normally prices tend to gravitate back towards the averages, okay, and that's what we'll probably see here. A retest of the average here will come in at the low of wave 8, which now let's zoom into the 1 hour time frame. I turn on the indicators. This is the line, okay? The red line is the 200-day simple moving average. If I take you back up to the daily time frame, that's where you see here. Taking down to the 1 hour time frame, you'll note that from the wave 8 in the intermediate degree, let me hide these moving averages now because they are disturbing. We go down in A, 3 waves down in A, 3 waves up in B. The substructure of this came in at 1, 2, 3, 4, and 5 in the wave C of intermediate wave degree, wave B. Now we're selling off in 5 waves, and this is clearly an impulsive structure. The way I see this, guys, is that we went down in 1, 3 waves up in 2. We're now going down in 1, up in 2, making our way down to wave 3. Wave 3 will come in between the 100% extension in this minor degree wave, or the substructure of the minute degree, which is projection between wave 1 and wave 2, gives you the 100% extension. As you guys know, wave 3s are the longest waves, but never the shortest in the Elliott wave count. The 1618 is the extension of wave 1 in the minute degree projected to wave 2. So these two levels of confluence come in at between the 309 spot 69 and the 308 spot 80, which coincidentally comes in at the support levels of the wave B, and as I was mentioning earlier, the moving average, this red line, the 200-day simple moving average. Obviously, as we go on with the days, the simple day moving average will keep on heading on higher. and try to meet the price bars here. So it'll do something like this as we move on lower. Okay guys, so that's what I'm expecting. Now taking you back down to the 1 hour time frame. Actually, let's go down to the 30-minute time frame. We took a trade yesterday and it worked out. Our trade was somewhere in this area. Okay, we took a 318 strike price for the Qs with the, I think it was the 17th or next week's expiration. We took profits today because at any moment we could see a possible bounce before we head on lower. So because of the short time frame, the theta would have killed most of the profits. I think we gained about 120%, 150% on that option, which is a pretty good considering we've been selling. So we use that as a hedge to sustain or to offset our losses or unrealized losses for our long-term portfolio, which is what we are doing at the moment. So the way I see this now is that once we finish wave 3 at these theoretical levels, we're going to go back up in wave 4. Obviously, wave 4 cannot go beyond the excuse me, the extreme of wave 1, which comes in at 318 spot 94. Once we see 3 waves pullback, we will anticipate a push lower into the wave 5 or wave 3, at which point we probably will see a break below the simple day moving, the 200 simple day moving average. Okay, so again, our first level of support after we finished completion of wave 3 is the 1618 or the 100% extension, which come in at 309.69 or 308 spot 80, at which point we see a 3-wave pullback up into the wave 4 support that will theoretically, if let's say for instance this comes down at the let's take a look here, anywhere between the 50 and the 38.2%. Okay, so we can expect a pullback around these levels. As I mentioned, anything above the previous wave 1 low is not, it'll count as a wave of count invalidation. Okay, so we'll wait to see for the price action lower. Okay, now taking you over to the SPY. The SPY at these levels here, again, let me hide the price bars here and let's take a look at, oops, this is the Qs. Let's take a look at the SPY and the averages. Okay, so the red here is the 200-day simple moving average. The green line here is the 200-day simple moving average, and the white line is the 20-day simple moving average. As you can see here, the SPY held the 50-day simple moving average. So we are finding support there, but potentially with the NASDAQ or the Qs moving lower, we could probably see the SPY moving on lower as well, at which point we will break support and head on lower to potentially test the lows of the 200-day simple moving average. I don't think that might be the case. I mean, the average is pretty far down north or south, I should say, which comes in around the 368 spot 55. So we will see. Not sure if that's going to be the case, but as you can see here, the SPY has been holding the 50-day quite well. We found support here, we broke below it, but we immediately bounced back and now held support. So that may be the case, that we break just slight below it and now we're gonna head on higher. Taking you down to the 1 hour time frame where we have our wave counts, the way we're looking at this is in the following manner: going up in 1, down in 2, up in 3. Actually, let's hide the wave count, no, sorry, the moving averages here, and let's go down to the 30-minute time frame. We have down in A, triangulation in B, 1, 2, 3, 4, and we're now completing the wave 5. Okay, so let's hide these for a second. See, look, I'm not, just because I see that there's further downside on the NASDAQ, okay, the way this is the way I am looking at this, that this was wave 1, down up in 2, 3, 4, and 5, which means that we are coming to completion in the cycle of wave 4 in the minute degree. But in the event that this is not the case, then we have to assume that if we see price action going lower, I mean, look, right, this came in, today's close came in at the 38%, which is the higher degree wave 4 support of this retracement. So if you take a retracement tool from the low of wave 2, project it to the wave 3, you get these two levels, the 38 and the 50. So as you can see here, we came close and we clearly held that as support. So there's two options for the SPY. Option number one is that this is wave 1. We went up in 2. We're going to continue going lower in 3. We're going to bounce back in 4. And then we're going to head lower into the wave 5. Okay. That wave 5 could potentially come in. It could find support between this zone here, the previous wave 1 high and the previous top here. So anywhere between this area, which comes in at the 397 to the 392. Unlikely that that might be the case, but given that the Nasdaq still has further downside to go, I'm not too sure at the moment, which is why I'm more focused on the Nasdaq currently, because there's a more clear count in that area. Okay, and so again, if the event that we are going to sell lower, so this will be down in 1, up in 2, 3, 4, and we're gonna go down in 5, which means that we're still currently on the wave 3. If that's not the case, then wave 4 finished here. We're now trending on lower into the wave 5. If we take extensions, Fib extensions, okay, to see where wave 5 bottomed, we'll take it from the higher wave 2 to the lower wave 3 to the higher wave 4. And you'll notice that this level here came in between the 618 and the 100%. Again, we may still have further downside to go if wave 5s can extend lower into 100%. It doesn't have to be the 618, but it can go down lower, which will come in at the 50% retracement at 400. That's where I potentially see this bottoming, okay, to be honest with you guys. So once we find this bottom, there is an opportunity for us to head on higher into new highs. So this might have been just a dip that we could take an opportunity to buy and take us to the last wave, wave 5 in the minor degree, in the intermediate degree, before our summer months consolidation, which is what I've been saying for the past couple of days. All right, guys. So all in all, I feel the Nasdaq has more downside to go, just because of the fear of inflation that came out today. As you know, inflation hurts valuations, or rising rates, sorry. The potential rise in interest rates hurts valuations for tech sector, and thus causing the sell-off, like in Uber, who, you know, the company is cash heavy, so they burn through a lot of cash. That's not good. With inflation, we saw, I think that the stock was down pretty big today. Tesla also. So all the big names are down, and let's see coming into tomorrow, if we hold 404 or 400, that will mean that the wave 4 is finished. This was a pretty directional wave 4, if I say. Actually, no, my apologies, it's not a directional, it's a 3-wave pullback here in an expanded flat, running flat, okay, which if paired up to this wave 2, which was more directional, this was more sideways. Oops, did not mean to do that. So that's the alternate, the guideline of alternation at play right there for you. Okay, so there you have it, ladies and gentlemen. We shall see tomorrow, coming into the close of the week. Tomorrow is Thursday, and we should be we should be bottoming soon, I suppose, here in the S&P. Otherwise, if not, then we'll head on lower into the previous wave 1 support, which comes in at the 398. All right, so with that being said, let's take a quick look at, actually, yeah, let's do a recap again on the Qs and what we can expect coming into tomorrow. Again, we can see for the downside coming into the wave 3, bounce back up in the wave 4, then sell off down into the wave 3, then bounce back in the wave 4 in the minute degree, and then for the consolidation down into the wave C, which will make up a larger flat in the intermediate degree. All right, guys, so that was another quick one, and I hope you guys enjoyed it. If you did, consider subscribing to the channel. Give me a thumbs up. That'll help get this content out. And if you guys want everyday Elliott wave analysis and updates for the S&P and the Nasdaq, or individual charts, try out our service. Is a 3-day free trial. The link is in the description down below. Okay, no risk. You can cancel at any time. As always, I appreciate your time, and I shall see you guys tomorrow. Take care.